So it has been an eventful start to quarter two. Rates have dropped from their high of 7.1% in the beginning of March to 6.1% in the beginning of April. And buyers that were desperate for sellers and price drops are in for a pretty big shock. 14 of the 17 cities in our Phoenix metro now are favoring sellers, and listings are averaging 2 to 3 weeks to go under contract when they were sitting 9 to 11 weeks at the beginning of the year. So, January and February were just kind of filled with, months of skepticism dominated, the marketplace. Now more buyers are entering the market once again and realizing that prices aren't dropping as some had hoped. And it is evident with an uptick in not only multiple showings, but even multiple offers again. So prices have now risen for 4 straight months, in total 3.7% and almost 1% in March alone. And that is despite extreme mortgage rate volatility, 2 large bank failures, and another Fed funds height rate. And you may ask yourself, Ryan, how can this be? The news was telling me the major real estate crash was inevitable with these high mortgage rates. We got to remember, price trends do not depend on just demand alone. Supply plays a major role, and it's been decreasing at an alarming rate going back the last 20 years. So just simply, there are not enough new listings coming into our marketplace to replace those that are going under contract. In fact, the MLS is seeing an average deficit of 54 listings per day since April 1st. And this may be shocking to some as there was such an increase in supply at the end of last year. But like you've heard me say before, it was still well below how much we needed, just for a balanced market, let alone an actual buyer's market. So the reality is the supply in the MLS peaked around 20,000 listings last year, but since then it has declined back down to 13,000. And putting that in perspective, that is still 40% lower than where we should be to have a quote unquote balanced market. The question is where is this relief going to come from? Single family home permits dropped by 74% in the first quarter. So clearly builders are not adding enough supply at the moment. Foreclosures are still at a record low levels and little evidence to support a rise there. And short-term rental market, like we've talked about, there's lower occupancy rates, regulations coming, and just there might be some owners that just don't want to be in the short-term rental market. But more than likely, those are going to turn into long-term leases, and really not affect the overall supply of houses. So what we're saying is time is of the essence for those buyers on the fence. As supply continues to decline, the percentage of sales with sellers contributing to closing costs has declined as well. In January, we saw almost half of the properties that sold had some sort of seller concessions. But in the last couple weeks for closed data, that number has dropped to 40%. And it's my assumption it will continue to go lower, as the closed data lags a month or two. So with fewer new listings hitting the market, has meant less pressure on sellers to reduce their list price. And as a result, the weekly price reductions are actually falling instead of rising as they typically would this time of year. Prices as of today were the highest they've been in 6 months. So in a nutshell, while high rates have stunted demand in Q4 and Q1 this year, they're not expected to stay high forever. And if and when they come down, demand is only going to get better. Demand is still pretty weak right now due to just the volatility in mortgage rates. And one can argue that the volatility in rates is worse than the rates themselves. A little stability can go a long way in improving demand. Buyers want to know kind of what they're looking at when they're looking at homes. So the best advice that I can give is to become educated on all the incentives that are still available, from seller paid rate buy downs to down payment assistance. While sellers are still open-minded and thinking that this market isn't as favorable as it's been for them over the last year or 2 years. And sellers, don't let the headlines scare you. If you need to make a move or want to make a move, there are buyers in the marketplace amid this rate volatility. You may have to hand over a little bit concessions, but if you're looking to buy, getting that on the purchase, should even the score. So a lot of different moving parts right now. Would love to, connect, answer any of the questions that you do have about the market. And as always, we are here for you. Thanks for tuning in.